Real Estate Radio, 94.9 News Now Simulating Talk. Byron Lazine, a little late there on the first segment. Chaz Cook from the one team at William Raveis Real Estate, as well as Brian Skelly with William Raveis Mortgage. All right, we've got a Fed meeting that happened this week, and Jerome Powell came out, did his talk. Not a lot of real estate questions. I went through the transcript. There was only 2 real estate related questions. I don't know if you have those up, Jess. I can pull them up too. So 2 questions. They weren't really anything of any depth as it pertains to housing. As you probably know, they held the rate. The CME group has a 100% chance that they will ease the rate in September. The question is, will it be a quarter? Will it be a half point? But the market seems to be, pro lower rate right now, obviously at 100%, and the 10-year.
Even myself, who plays the cautious optimist, is feeling pretty optimistic right now about mortgage rates. Friday, Mortgage News Daily said the average rate was 6.62, lowest rate according to them since December 27th. So lowest rate all year yesterday on Friday. And I had to go back to April of 2023, 16 months ago, last time that the average rate was under 6.6, and we were at 6.62 on Friday. So things are looking good. I've got some other comments about why I'm optimistic.
I mean, could it continue leading up to September, or have we seen, have they priced it in, or could it keep going?
So it's somewhat priced in. So, I mean, at this point, everybody expects that they're going to cut the rates in September. So like the day after they cut the rates, I don't expect that mortgage rates will be significantly better the day after they cut. But they're getting better because of everything that's going on and the expectation of the cut. There was some other interesting, I was listening to a podcast that was talking about the meeting, and I picked up on a question I brought up on the show a couple times before. And I said, why doesn't the Fed buy some more mortgages to lower rates? They're concerned about inflation. Housing is the biggest part of inflation right now. Why don't they buy mortgages? So they said after this meeting that what they call quantitative tightening will continue. So quantitative easing is what they did during COVID and what they did after the 2008 recession. So the quantitative easing meant that the Federal Reserve purchased large amounts of U.S. mortgages and U.S. Treasury bonds to make rates low. So after the Great Recession and during COVID, they did this. And this is a big part of the reasons why rates were so low during COVID. Not just because they cut rates, but because the Fed went out and proactively bought a lot of mortgages to artificially lower the market. And so a couple times I said, why don't they buy it? And I finally got the answer. So the reason that I got was that we're kind of entering a more normal economy right now. So like everything's going, the soft landing is happening. Like unemployment's about where they want it. Inflation's about where they want it. The economy's still growing. We didn't go into a recession. So they're kind of getting their balance sheet ready for the next emergency. So think of it as like if you lost your job and you ran up your credit card debt, and then all of a sudden you get your job back, you're saving money again. You might say, well, you're doing great. Why don't you go spend more money? Well, we know the next emergency is coming. Like when things are going well, like pay down your credit card debt so that next time you have an emergency, it's at zero balance and you don't have a big balance on it. So that's basically their philosophy, is that, there's no major emergencies happening right now. So they're freeing up their balance sheet so that they have that tool available in the future, which made sense. So then that made me a little worried that maybe the rates won't go down as much as everybody thought. But there was another event that happened this week, which a lot of our listeners probably don't think has a lot to do with mortgage rates, but it does. There was an assassination of a top Hamas leader in Iran, which has...
how does that play into interest rates?
Good question. Yeah. So
it makes them lower?
It does.
More Hamas assassination.
Let's go. Let's go. Fire them
up.
So rates did get, that's part of the reason, actually, I think a more significant part of the reason people give credit of why the rates went down this week. So what happened was, so there's assassination of Hamas leader Ismail Henyaha in Tehran and another Hezbollah leader in Beirut. And so what happened is
These are the bad guys, right? These are the bad guys.
Hamas is not good.
I am not an expert on Middle Eastern stuff, but what the takeaway for our real estate
I think
listeners
they're terrorists. I
Yeah,
think
is
we can
that,
say that.
there's a risk of an escalating fighting into an all-out regional war. And there's several leaders around the world have come out and said, we're worried, like, we need a ceasefire, like, this could get out of hand.
Well, hold on, we didn't assassinate him, did we?
No, I think it was
I think
somebody in
I saw this. Israel.
I think it was
didn't
somebody
claim it,
from
but-
Iran.
Yeah.
So Iran
Okay.
is now involved.
Okay.
So their concern is like, okay, it was, Israel and Gaza. Now we've got Iran involved a little bit.
All right. Either way, this guy's dead. How's it lower interest rates?
All right. So when things like this happen, it creates economic uncertainty around the world. And when there's economic uncertainty around the world, people put their money in a safe place. And the safest place to put your money is U.S. Treasuries, U.S. mortgages. And so a lot of investors were like, whoa, if this war continues, we need our money somewhere safe. And that created demand for mortgages. At the same time that the Federal Reserve is saying we're going to continue selling the mortgages that we have, the whole world of investors are like, well, the world's getting crazy. We need to put our money somewhere safe. So it's kind of a good situation for mortgages. So we'll see how that goes. But it's
that's an
playing
interesting
it's playing
take.
playing a part.
Yeah.
So there's a little bit of a burst or momentum we've had this week, is what you're saying, and
Yeah.
you're right. I mean, we've gone just in a week time frame, basically from 6.9 at the end of last week. So this time last week when we did the show, we were just under 6.9. Now we're just at 6.6. So full quarter off in a week.
It seems
and momentum trending lower.
It seems reminiscent. I always remember 2016. What happened was everybody was saying rates are low. This is the year they're going to go up. And for the first half of the year of 2016, everybody was saying rates are going up. And then in August, it's August right now, Greece went bankrupt, and it wasn't expected. And the mortgage rates just plummeted when that happened, because when a major country goes bankrupt, everybody's like, oh, this is
Major?
This is
Are they major?
Well, Greece
Maybe
has, for
notable?
financial wise, I wouldn't say as a stability for a country. I
was
wouldn't give it to them, but
a
financially.
notable country.
a company large enough to make a ripple effect. So
Okay.
I think sometimes people forget how interconnected all this stuff is. But I mean, there was a huge refinance boom in the fall of 2016 that was directly because of Greece going bankrupt. So I mean, a war in the Middle East could create a refinance boom in the fall of 2024. It could definitely happen.
I ran simple math, just no, this has no credibility, what I'm about to say, but I'm going to say it anyway. Last year, I think we covered this once on the show, but last year when you had this belief that rates were going to drop, we had a peak last year at 8.03 in October on the 30-year fix.
Mhm.
Once quarter four, there was a strong belief that we might have a Fed rate cut in quarter one.
Mm-hmm.
You saw the 30-year fix really go all the way down to 6.63, 6.6. December 27th was
Yeah.
the low, matching today's rate, right? So
Yep.
you had a quarter four where we believed we were going to get a rate cut in quarter one. We dropped down almost 1.5 points. Then obviously quarter one, hot inflation reads. 10-year goes up, 30-year goes up. We go all the way up, this year to 7.5 plus. Now we're almost a full point below that. If you look at peak to bottom, we could have based off of what happened last year, we could have another 0.5 point we went down 1.5 points last year from the peak. So if our peak's 7.5 this year, could we not get down to the very low sixes? That's just like based on last year when we thought we had, I know other dynamics like you just said,
So
I
I'm
don't
going
know
to do
what
something I don't.
crazy people in
Assassinations and
Hezbollah is
stuff.
going to do, but just based on that, where it's like there's this belief that the Fed's actually going to do it, and there's 100% belief from CME Group, who basically predicts this stuff, that it'll happen in September. There could still be another 0.5 point between now and September that we move down based off of quarter four last year.
So I'm going to do something that's different than what I usually do on the show. I'm usually like, oh, everybody be cautious. The rates aren't going to get that low. I'm like feeling really bullish about low rates today because, the traders, they talk about, when you talk about the highs and lows, they kind of talk about like pushing against the bottom. So there's this floor and we're looking at the graph and there's been like a couple times where it got down to like 6.6 and then went back up. It's happened a few times. So that's kind of like this important level that it just can't seem to be like break through that 6.5% level.
Right. You said we were at 6.4. Was
6.62 on Friday, and then we
when
look
was the last
back.
time we were at
like
6.4? We were looking at that before the show.
it was over 15 months ago,
That's
but
right.
there's been a couple times
April.
it's gotten
Yeah.
down to and even in December it got down to 6.6 and then went right back up again. So, but then Friday, yesterday, we had some fantastic unemployment numbers, and fantastic for rates, not fantastic for unemployment. So unemployment came out 4.3%, highest level
high.
since October of 2021. Number of new jobs, 114,000 in July, significantly lower than people expected, down from 179,000 in June. So, I mean, that unemployment news very likely will make rates lower on Monday, and we may break through that 6.5 barrier that we just
off of
haven't
that
been able to
news.
get through.
That is significant and good for pointing that out, because on Wednesday when Jerome Powell spoke, he used the word dual mandate a lot, which he hasn't been using lately. The dual mandate is, number one, obviously get inflation down to the 2% target, but number two is maximize employment. As unemployment continues to really bubble up here more than they thought it would be. This is more than expectations, 4.3. They were hanging around the 4.1, and I think Jerome Powell knew that that number was coming in. That's higher than where they want to be right now. They certainly don't want to. Everybody in Washington, D.C. doesn't want to be at 4.3. They don't want this number rising into November. Not that Jerome Powell says he doesn't care about the politics of it, but the more that number goes up, the quicker he has to react, and the deeper he has to react, which means in September, you could very likely be looking at a 0.5 point if the labor market continues to soften and start to show cracks that unemployment could get. They don't want that having a 5 handle on unemployment, I'll tell you that.
Yeah, no, I believe that. I mean, as far as this is one of the more optimistic times, like I've been reluctant to pull out my database and see who should I refinance, because I've been waiting for it to drop, but might be dusting it off this weekend and looking and seeing who bought a house in the last 24 months that has a rate, over 7.25. Those folks might want to go to scheduleloanappointment.com.
Scheduleloanappointment.com if you're interested in what these low rates can do for you. Brian Skelly, William Raveis, Real Estate Radio. You listen to 94.9 News Now, stimulating talk.